Well, let's talk HUB24, hitting all-time highs in yesterday's trade as the company posts a record September quarter. The company saw record inflows of 1.36 billion in the quarter, up from 10% last year. Funds under administration also up 32% from a year earlier at 19 billion. Share price on a tear this year, up over 60%. So to take us through it, Chief Executive of HUB24, Andrew Alcock, joins us live in the studio. Welcome, Andrew. Thanks for joining us on the show.
Thanks for having us. Cheers.
A very strong result in terms of what was released yesterday. What's driven it?
Oh, look, I think the result is a reflection of the market having confidence in what we're doing. And you know, as a business, there's a revolution going on in financial services, a revolution in wealth management, and we tend to be leading that in terms of being a fintech, creating real value for customers. So I think the flows are up. COVID isn't affecting our business sector as much as others might have thought. So people are looking at the fact that we've got growth upon last year, which is unusual for companies to have 10% up on prior corresponding periods. So people are saying, hey, there's confidence in our business and these guys know what they're doing. So hopefully it's a reflection of confidence in what we're about. So thank you.
Is this growth looking at your existing customer base, or are you sort of broadening this to new customers?
Look, we're growing all the time, Andrew, in terms of both existing clients. We get reliable inflows to our business plus new clients. And I think it's a result of actually meeting the market with a great innovative solution. It is about what we can do for the customer in wealth management, which is the revolution I refer to. You know, the industry is reshaping itself and we're at the heart of that.
Yeah, so what's your point of difference then that you're offering that others aren't?
Quite frankly, a platform years ago historically was just about grouping assets together and helping you buy and sell your investments and report on them and maybe manage some tax. Today, our platform is about, it's far more than that. It's great customer service, it's great technology, but at the heart of it, we can actually create real dollars and cents for investors. We can create real increased returns on their outcomes by managing their tax differently and personalising those trades across tax. So with good advice, good investment management, we can make a difference. We've got a white paper out now with Milliman helping us do that, where we can demonstrate thousands of dollars of differences in using a platform like ours to somebody's retirement. And if you can unlock that value in our industry, why shouldn't we?
So you've signed 27 new licence agreements during the September quarter. That's both sort of large and boutique licences, self-licensed practices as well. Is this something that will continue going forward in terms of pipeline?
It's pretty consistent. It's consistent with most of our quarters. We thought when COVID hit we might see a slowdown. There was a bit of softening in April, but really things picked up again since May, and it's been the same. So we regularly have around about 100 new advisors each quarter and up to that amount of new licensees signing on to the platform.
Tell us what effect these record low interest rates are having on your business, particularly when we see the distinct possibility there's going to be yet another cut perhaps next month.
Oh, look, the interest rates are impacting our revenue, and that's clear in our recent update. And I think that's fair, because we typically try and find the best value outcome for consumers. So in high interest rate environments, we try and pass on as much as we can. At this point in time, we've decided to take a haircut on some of our fees because that's the right thing to do. We're all in this together, as they say. So it does impact our revenue, but you know, that's for this point in time. I think the other factor is record low interest rates. Consumers and advisors are looking for growth or how they can maintain assets. Hence, you've got share markets roaring, you've got the results we're talking about with our particular stock, but people are looking for investments, and that's good for activity in our space.
Okay, so when it comes to price, because you know you've talked about, I guess, price, but quality of product obviously comes into play when selecting a product. How important is price, though? It's got to play a big role.
I think that the industry's been romanced with price is the answer, and I think we're trying to demonstrate that's not quite the case. Obviously, you want to get good value with whatever you purchase, but you don't want to buy a three-wheeled car. You want to buy a four-wheeled car, and if our car, so to speak, can actually give you returns back in terms of greater outcomes, and they're invested over 20 years to retirement, then price becomes less of a factor. Having said that, we're very, very keenly priced. We're very competitive. In fact, I think we've led the market on price, and hence, you know, the other guys have had to lower price to match us.
How would you measure investor confidence at the moment? But given what we've been through, but also the fact that this uncertainty is just continuing?
It's a really great question. I mean, you look at what's going, we're at near record highs in the share market. People are looking for value and opportunities. It doesn't seem to add up with what's going on in terms of the health environment we're living in. I'm pleased that as a nation we're getting on with it and we're moving forward and we're not stuck in the mud. But I think it's all a bit, you know, well, hang on. Is it tenuous? Is it real? We'll see. I think the confidence is great. Let's keep putting one foot ahead and work together to try and maintain that confidence and try and build on that. But you know, we know the environment's unstable.
So from a business perspective, how do you play that when it comes to investment, say in technology, when it comes to capital expenditure? Do you pull back, because of the uncertainty, or do you continue on your path?
I think where we are with COVID and this environment doesn't change the fact that our strategy is about unlocking value. It is about winning in an environment where the market share is up for grabs. The dominant players, the banks and other institutions are going backwards, and there's a few companies like HUB24 going forwards. So on behalf of our shareholders and our customers, we keep investing.
Andrew Alcock, terrific to have you live in the studio. That's always a bonus.
Thank you for having us.
Thanks for joining us from HUB24.